The White House is on the defensive tonight as inflation rises yet again. It's another increase that's rattling Wall Street and draining bank accounts of everyday Americans. According to the Labor Department, consumer prices jumped 8.6% year over year in May. It's the biggest increase since 1981. Prices are rising everywhere. Airline tickets up about 38% from a year ago. Energy about 35%. And food about 10%. Look at breakfast as an example. The average price for a dozen eggs up $1.20 in the past year. Bacon about $1. A gallon of milk up 70 cents. Meantime, Wall Street didn't like the new inflation data at all. The Dow dropped nearly 900 points today. It's been down for 10 of the past 11 weeks. That hasn't happened since the Great Depression. Today, President Biden spoke at the Port of Los Angeles, and again, he blamed the rising prices on Russia's invasion of Ukraine.
I understand inflation is a real challenge to American families. Today's inflation report confirmed what Americans already know. Putin's price hike is hitting America hard.
The president vowing to lower prices for Americans. In a moment, CNBC's Kayla Tausche on how the White House is responding. First, CNBC's closing bell anchor Sara Eisen. Sara, one of the economists, or at least some of them, expect inflation to cool in the second half of the year. Is that realistic now?
Well, Shep, one takeaway from today, nobody can forecast peak inflation. Optimism had been building in recent weeks on Wall Street that prices had seen their high points, but this shockingly strong and broad read today proved them to be wrong. Despite the troubling rise, economists do say it should start to come down in the coming months. Why? Well, we have seen signs that demand for goods, electronics, apparel, used cars is slowing. We heard that this week from Target, for instance. That should pressure prices in those areas. There's also some early evidence in retail and semiconductor industries that supply chains have started to improve. Chinese factories and ports are open for the moment after being shut down for COVID. And while the American consumer has held up relatively well, the Federal Reserve is slamming the brakes on the economy, and we're likely to see the impact of that in the coming months. So yes, we should start to see prices fall, but we're still dealing with the shock of the war in Ukraine, and that's having an acute impact on the oil and food supply of the world. And as we've learned from history, Shep, once the inflation genie is out of the bottle, it can be hard and painful to put it back in.
Yeah, no doubt. The Fed Chair Jay Powell has ruled out 75-point rate hikes this year. Will today's economic data put that back on the table, maybe?
Well, the odds are rising for that, and that's actually one of the reasons stocks sold off so hard, that the Fed is likely to now be more aggressive. In fact, a few Wall Street firms like Barclays today changed their forecast for a 75 basis point increase in rates at the next meeting. And that happens next week. That's a triple increase in interest rates. Something, as you said, Fed Chair Powell previously ruled out. He could also change his tune in the news conference next week and now say they are open to it. Bottom line, the Fed has to get it under control, and it has to preserve its credibility. Remember, the mandate for the Fed from Congress is stable prices and maximum employment. Well, we certainly do not have stable prices at the moment. We do have a very strong jobs market, and that together, Shep, is a green light for the Fed to potentially go even bigger. But it also, unfortunately, increases the risk of a bigger slowdown or even recession.